Hello, everyone. First, thanks Hash for SEB for hosting Southeast Asia Blockchain Week. My name is Elena. I'm going to be a moderator for today's session. I'm a business strategy director at Presto. Presto, just for you guys, it's a quant trading company established in 2014. We're based in Singapore. We provide liquidity and OTC executions, investment, along with our recently launched Presto research as well. So today we're going to talk about institutional adoption, how we're going to bridge the gap between institutional investors and Web3. So yeah, here's our amazing panelists on the stage. So before we begin to the topic, I'm just going to give you time to talk about yourself and then, what your companies do. So we'll start with Willy.
Thank you. Happy to be here. My name is Willy. I'm the COO of WooX. So WooX is a centralized exchange, but we are very uniquely positioned in terms of we target professional traders and sophisticated retail in the regions like Europe and APAC. Most of our users are coming from Europe, and we build products because we came from a trading background. So we build products that are very customizable, high performance, and also deep liquidity. We also have a decentralized swap called WooFi. It's a cross-chain swap supporting 10 different chains, currently top 10 global in ranking. And we have the Woo token. Woo token, I think some of you may know, we're listed in many different exchanges and high trading volume, top 100 market cap usually. So yeah, that's a brief summary of Woo and myself.
Hello, hi, I'm Jittinun, CEO of TokenX. We are a subsidiary of SEABW Group, one of the largest financial institutions in Thailand. For TokenX, we hold the ICO portal license from Thai SEC. What we can do is to provide an end-to-end solutions or service for the RWA tokenizations, starting from advisory, tech provider, and also the launchpad. Yeah.
Hi, thank you for your audience. My name is Taiko. I work for Copper. I head the region. Copper is a institutional custodial service. We are headquartered in London. We have offices in Singapore, Hong Kong now, Switzerland, New York, and we provide custodial solutions for institutional investors. 85% of our clients are trading firms like hedge funds, prop shops, HFT, etc. We do also provide custody service for token foundations, VCs, all those type of different token holders. But we're generally most well known for our connectivity to various trading venues like your OKX and Bybit, etc. And through that, we try to mitigate counterparty risk at the exchanges. That's something that we've built out about 4 years ago. And after the fall of FTX, I think the market generally kind of caught up on understanding that the mitigation of counterparty risk is a quite important thing. So we've started to get a little bit more realized in the market. I think overall the custodial solution now, with all the regulations that are starting to come on, including Singapore and MiCA and etc., I think it's going to be a key factor when institutional investors start looking to trade crypto.
So, first of all, thank you so much for having us here. My name is Kenny. I'm from Taiko. I lead DeFi on our ecosystem in Taiko. Essentially, what Taiko is that we are a base rollup, and we are essentially a Type 1 ZK rollup. So what that essentially means is that our architecture is unique in the sense that we are a shared sequencer. So that means all transactions on Taiko are decentralized, right? Compared to the current solutions today. And since we are Type 1, we are fully Ethereum equivalent. So for any builders out there, that would mean that developing on Taiko is essentially just flipping a switch of an RPC. And now that, creates that easy developer-first experience for anyone to come on board and, have that absolute experience of, what they're used to on Solidity of Ethereum. Thank you.
Hi everyone, my name is Pamela. So I head up sales in APAC for Talos, which is a leading trading technology provider. So we are a full front-to-back solution where we power up the entire life cycle of a digital asset trade, starting from pre-trade to trade execution and onwards to settlement, even portfolio risk and treasury management solutions. So whether you are a buy-side trading firm looking for a trading platform or a sell-side service provider looking to enable digital asset trading services to your end customers, we do have a suite of product solutions for our clients.
Thank you. So as we mentioned before, so we're going to talk about the institutional adoption. I know this is a topic that has been widely discussed, but we do believe that there's still certain questions, critical questions remain to answer. For example, how we are going to bridge the gap between the institutional investors and Web3, or how we can build credibility in Web3 for institutional investors. So, and then Taka also mentioned about regulation. So there are still a lot of hurdles for institutional investors to come up to the Web3. So I think there are things that we can talk about. So this time, I think I'm gonna ask you one general question for everyone, and then maybe we move on to each specific questions for all of you. Okay, so first question that I want to ask is, what do you think is the current state of institution adoption, especially compared to last year's landscape? We'll start with the Willy. Yeah.
Yeah, this is not gonna be a good answer. The reason is it's confusing because I think it's our industry is very cyclical, right? And we've seen people with strong interest at first from December all the way to March or April.
True.
Right, and then we've seen a slowdown in the past maybe a month and a half. So in terms of stage, I'd say interest still there. Look at the ETFs, 4%, right? So you see continuous inflow of capital into the space, right? Regulations pretty clear now. You have the Binance overhang that's almost over. And obviously, the other exchanges will follow. CeFi completely, I would say, you have very clear guidelines all over different jurisdictions. The unclear thing is DeFi. So I think that's a part where institutions are having trouble to navigate, even though it's very attractive. Yeah.
Okay, so maybe I share in terms of the Thai markets and digital tokens, and I leave cryptocurrency for other panelists. In Thailand, actually, especially for digital token, real asset tokenizations, we see more and more interest from institutions, both from the perspective of the business operator and also from the investor sides. Due to the kind of improvement of the infrastructure of digital asset like custodian, and also in terms of the more clarities of the regulations in Thailand as well. So they feel more comfortable to participating in, especially for the area that having a legal support or legality on that. Yeah, let's see.
Yep. For the institutional investor side of things, and I can only really speak for that segment, what we see a lot is that in terms of regulation, there's a lot of guidelines based on service providers, but there's nothing really on the buy side of things, the investor side of things. So a lot of cases, if I look to the kind of Western world, generally the mindset is if there's no regulation, then they just go into it, right? Because there's a lot of market misallocation. There's a lot of opportunities to invest in that asset class where you can capture. But in terms of APAC, the mindset is 180, right? So generally people want to know that the government signed off on it. What are the clear guidelines of investing in crypto assets? And so far, not that many jurisdictions have offered anything of any clearance of that part. And there are some that says, okay, you can invest a certain percentage of your portfolio into crypto assets, but you can't have a full-fledged crypto hedge fund, which means that it's very difficult for them to, even if they want to invest in crypto, it doesn't allow them to do that. So I think that part still needs to be worked on.
Right.
And hopefully, down the road, we'll start to see a little bit more of that change over time. But so far, I don't really see that happening. And what we're hoping for is what can we provide for those type of clients that offer them more comfort in investing in crypto assets without having gone through the regulatory hurdles. They can still work within their guidelines and be able to invest in it, or just wait for the regulations, right? So I think we're trying to take a bit more proactive approach in order for them to feel comfortable that they can invest in this asset class.
Cool. So I'd like to break it down into two parts, right? On a national level and on a global level. So where I'm kind of seeing crypto regulation and where it's at is I fully agree with Willy, actually, with what he said about that it's very confusing. And actually, it's true, right? You go to one country, the viewpoint of the government is quite different from another, and the regulations and even the citizens and how they act towards crypto in general is quite different. So this is something that varies country to country, region to region, and there's so much differences in how even the West and Asia do it, right? So I think like there should be more unity in that. And that it will take a long time on the national level for each of these countries to understand it, right? And on a global basis, I think it's still very nascent to the point that we are very early in terms of governments, institutions, whichever public institutions are embracing crypto and how that's used on a day-to-day basis, or even just law creators and sort of different regulators are sort of not yet there in terms of really understanding things. So I think it's still good in the sense that we're getting somewhere, right? ETFs, we're getting crypto funds, and it's a step forward. But I truly think that we're still not there. But I think that from last year to this year, it's been an incredible leap. And that in the coming years forward, we're going to see more amazing leaps. So, yeah.
Okay.
I think for us, we do have a very interesting vantage point at Talos because as an institutional trading provider, we do see a lot of flows, billions of notionals flowing through our pipes between buy-side and sell-side providers, right? So one thing for sure is market sentiments is definitely a lot better than 1 year ago, right? I mean, you can see a lot of exchanges are starting to say that they are hitting all-time high in terms of volumes, even for us. And I think that's a factor of a lot of things. And one of it was the ETF approvals in US, and then followed by a few weeks ago, Hong Kong ETF approvals, not just for Bitcoin, but also for Ethereum, right? So what we see is actually existing players that are already in crypto. I think they know they will be, and they are actually thinking of innovative ways to capture more market share in this place. And that's through things like trading through derivatives like options or perpetuals or even structured products. So we've seen quite a bit in that area for a lot of existing players to move rather than just cash or spot kind of trading. The other piece is new players, right? New players that previously were kind of on a hold because of the bear market, on a pause on some digital asset projects, launch delays and things like this. They were all starting to think about getting back into this game, but probably starting with small allocations first, understanding the market back again. But I think all of this is still very, very positive for this ecosystem. But I do agree with the panelists that I still think there's a lot more room to grow, right? For a lot of other people that are not in this space, like your mainstream banks, right? Your pension funds and all these guys that we really do need them because of the volumes that they are actually contributing to this ecosystem. And that can only happen with more regulatory clarity, infrastructure support, and better liquidity in the markets.
Right. So some of you gave me positive insights and some maybe denied. But Pamela has mentioned like in terms of the trading volume. So I want to ask one question to Willy. So as a trading venue, are you seeing any like a meaningful trading volume coming inflow from institutional investors? If not, what kind of strategies that we can build together to bridge the gap between the institutional investors and Web3?
Yeah, definitely more flow. And short answer is yes, right? Unfortunately, we're not as big as the top guys. I hope I can see more flow from institutions to us. I'm gonna depend on a lot of these guys here. Definitely see it because we talk to people, we talk to partners, and we talk to regulators, we talk to family offices. Everyone has the intention to do so. But I'm of the opinion that the institutions will take much longer, obviously, right? So I'm of the opinion that this cycle, it will be a longer, less volatile bull cycle instead of like a shortened, few months or maybe 6 months and then it's over. And we're gonna see a lot of markets like what happened in the past few weeks. Then he'll come back because RWA is slow, and also like things like DP and AI are slow as well. And institutions, when they come in, right, they go to majors, and they can't really put a valuation model on the alts yet, right? So we're gonna see a very long and dragged out process of these adoptions. And overall, I think the volume will be there towards maybe the end of this year, when they have all the clarity from legal, trading, and sorting out all sorts of counterparty risks, credit risks. Then we'll see true adoption. But I still believe that adoption is still going to be on the majors and on the CFI side for institutions. DeFi, I hope they will be there. I really do hope, because there's a lot of opportunities there. But I think this cycle likely where we won't be able to see anything significant.
What do you think the hurdles for for institutional investors to get into the DeFi? What could be regulations, of course, but is there anything that you see like there's particular hurdles for institutional investors to come in there?
Well, there are a couple, right? One is very simple, is that I think the knowledge of it is still lacking, right? So that's like the general, very general. And second is, I think the capital efficiencies in DeFi, plus also the last point is they simply don't know who they're trading against, right? They don't know their counterparty in DeFi. So for a lot of institutions, I mean, it's like they're going in blind and then taking on a whole ton of risks, right? So I don't think that will happen anytime short. Actually, we are very bullish if when DeFi regulation becomes clear, and also there decentralized ID solutions out there that can solve this problem.
Okay. All right. So, Willa mentioned about, how institutional investors, they always interested in, they want to come in, but then it always takes time. But Jittinun, you're, like TokenX is already one that has a relationship with, the major bank in Thailand. So you're definitely very engaged with the institution. So because, you guys are already providing tokenization services for them. So how do you think that, those institutions, TradFi institutions, are adopting blockchain technology in this kind of period of time?
Yeah, I think if like you go to market and ask like a general corporate whether they have heard about blockchains, I think almost like 100% they have heard about the blockchains. But if like we ask them whether they know the really benefit of the blockchains, I think maybe half of them understand just the concept. And if like we ask them whether they know how to apply blockchain to their business, I think less than 10% they will like kind of think or understand how to apply the blockchain to their business and the benefit of the blockchain, because blockchain has like so many applications and so many use cases. So they need to understand what type of the use cases that fit with their like kind of business first. And we see a lot of like Web2 leading Web2 company enter into like Web3 business, like Nike, Gucci. They always like partner with like Web3 company. They do not go alone, because like I think for the Web3 business, the one who succeed in like Web2 business doesn't mean that they will succeed in Web3, right? So it needs like different approach to think about how to work on like kind of blockchain, how to work on Web3. So I think for the corporate or institution in Thailand, it still like take times for them to like kind of understand the real benefit and the real use case. And I think it takes time, or they need partner or always like need advisor to help them to like kind of to think about or get through the really benefit and apply to their business. Yeah,
that's true. That's true. So, well, Taka, So Cooper also, has been providing, your custody solutions for institutions for a long time. Of course, you're another one who has already engaged with institutions, of course. So what do you think that the challenges that institutions are facing right now? What do you think is the biggest challenge for them too?
Yeah, I think I alluded to that already a little bit. So
you did. But besides the regulations, maybe.
Yes, so definitely it is regulation, and then it's also about access. So regulations, I think I touched there already, but even on the service provider side, the custodial services were not really regulated as well, right? Recently, MAS expanded to include custody. Last week I went to Hong Kong to talk with the HKMA and then the field government entities about how to regulate crypto custody. So there are, improvements, and then and it's expanding, but it's not catching up to the demand, right? Because all these institutional investors want a regulated or licensed custodian, but there's nothing there there's a problem that can't be solved, right? Unless the regulators kind of catch up to it. So that's always an issue, and I think that's always going to be lingering around. So they have to kind of work with whatever framework there is existing, and then they have to be comfortable with it. So that we've been through a lot of due diligence with a lot of clients on security, like how do we hold the assets, etc. I mean, there's so many lists of DD questions that we were given by institutional investors, so that they can make sure that they're comfortable with us. Because if there was a license, then they'll be, I wouldn't say automatically, but generally comfortable with us. But they need to do their own diligence, which makes it their onboarding process and everything extremely long. That's one. The second part is access, as I mentioned. So usually for an institutional investor, and I worked in hedge funds before, so usually what you do when you open a hedge fund is that you'll have a prime brokerage. So prime brokers is a part of an investment bank where they service hedge fund clients. And basically, you don't go to like an exchange and open an account, right? It doesn't work in the TradFi industry. So you open an account with a prime brokerage. You could have one, you could have multiple ones, but they're your counterparty. So then you send, in crypto terms, you'll say, I'll fund you in fiat, and then I could start trading. And usually the prime broker uses their balance sheet to trade, right? So they might be netting off different clients in the background, but they're sending, all these orders around into different exchanges, or depending on asset classes. So that's completely lacking in the crypto space. There's nothing close to resembling that. So I think that part is always a difficulty for a lot of institutional investors, because they can't get that service, which means like if you want to do cross-exchange portfolio margining, or if you want to do like certain things that you can't just do one thing on one exchange sometimes, right? You might have a long position or spot position on one exchange, and you have a short perpetual position on another exchange. Both can get margin called. But then usually if it was, use a prime brokerage, then it'll be fine because it kind of nets out itself, right? So those things, there's a lot of difficulties for institutional investors just get into the crypto space, because you don't have the same infrastructure that you're used to begin with. The other thing that we've been speaking to a lot of clients is a lot of still institutional clients, because crypto assets are not regulated, they can't get into it. But if they can get in with fiat, they're quite happy about it. So as long as they don't touch crypto, they can do that. Usually, you could do that through prime brokers. But what we're trying to do is we set up a securities brokerage firm in Abu Dhabi, so that clients can come to us with fiat or securities. And then they can use that, and then we'll use our technology to kind of mirror that into an exchange, so that they can use that as initial margin to trade, crypto options or other types of derivatives. So that's kind of how we're trying to bridge that crypto to TradFi at the moment, so because there's a gap of that prime brokerage business. So I think that there's a lot of steps that are needed to get that, more TradFi hedge funds or, institutional investors into the crypto space.
Yeah, so we've been talking about this whole, counterparties or use case. So I think this question might suit for you, Kenny. So you're building a Type 1 zk EVM rollup, definitely one, ready for the institution scale. So would there be any like a specific sector that you're focusing on, in terms of like a use case?
Absolutely. So my role at Taiko is head of DeFi, but what we are is essentially Ethereum extended, right? So as we are extending Ethereum, we're general purpose, and all builders are welcome to build whatever they want, whether it's things in DeFi, whether it's things in degeneracy, games, whatever platforms they might like, dApps or infrastructure. We are open source, and we welcome all types of builders, right? With this, in the spirit of the panel and its theme, what I'm really bullish on, and what I think what could be incredibly useful, of course, is RWA, in the sense that RWA bridges that gap between traditional finance and DeFi, right? Now you have DeFi participants being able to really connect with RWA products or RWA platforms. So essentially what RWA is just traditional assets even, right? We talk so much about real world assets, and it's just assets that we usually have on a usual basis and connecting to it. RWA is basically, your stocks, your bonds, your commodities, and so forth. And for anyone to connect within that through DeFi is such a powerful thing, right? Anyone who has money on crypto can now be able to invest in, say, things like stocks, commodities, and perhaps trade off that, right? So there's an amazing way that we can really leverage the use cases here. And there are even things such as tokenized ownership of things, such as real estate. Maybe all of us right here on the panel can own a piece of land somewhere. We can go to a beach and we all own pieces of it through tokenized securities and so forth. So I think there are unlimited use cases for how DeFi can connect to traditional or real world assets.
All right. So we're running out of time right now. So I think that's going to be the last question for you, Pamela. Talos, of course, already has a lot of TradFi partners. So I think there is something that you could probably share with us, the perspectives of your partners or the other institution investors' perspectives on the future of their institution adoption on blockchain.
Yeah. So I think for traditional clients that are working with us, there's actually quite varying perceptions in terms of institutional adoption. I would say a mix of crypto curious, those proceeding with caution, and also those for strategic planning. So definitely they are showing interest in digital assets and also in blockchain technology. But I think if they don't want to participate it directly, they always look into partnerships and investments, right? Into Web3, right? I think that's the topic here, right? They could always do VC investments into some of the Web3 companies to believe. And I think that's actually a very good way to educate themselves and start learning, right? Secondly is, I guess the second group are traditional investors that know they want to do it, but they are proceeding with caution, because these are the guys that are licensed entities, meaning that they are licensed by MAS, by SFC. So whenever they do something that's related to digital assets, first they need to think that, whether my current license allow me to do that, do I need to upgrade into a type 1 uplift license in Hong Kong, or do I need to set up a offshore entity to deal with digital assets? So there's a lot of such things to consider, right? And that also comes with regulatory frameworks in different jurisdictions. Security, so a lot of them are looking for SOC 2 type 2 kind of assurance standards. Compliance is another thing, whether you adhere to travel rule, that's one of it, AML and KYC, right? All these standards really have to meet. So they are proceeding with a lot of caution, and unless there's regulatory certainty in some of the jurisdictions that they really want to work with, I think they will just wait, right, until the regulators give them an answer, right? But I think one thing for sure is they recognize the opportunities that digital assets can give, especially for traditional asset managers. And that's why, even though it might be slow, right, they would just think of a way to diversify their portfolio into digital assets. I think the crypto market is actually a lot more mature, right, than when I first entered maybe 5 years ago, right? If you think about it, at that time when banks want to enter, they actually worry about integrating into digital assets platforms because of APIs, right? They are all running REST, WebSockets. There's nothing fixed. And there's not a lot of institutional infrastructure providers. When I talk about infrastructure providers, it means custodians, right? But now you have guys like Copper, right, that could offer institutional custody services, right? Even for AML and KYC, you have guys like Elliptic to help you with all of this AML, KYC. And for trading technology, you have Talos that help you to normalize all these APIs, right? And manage all these connections that maybe TradFi guys are not. One thing to note also for liquidity, right? Because previously, a lot of liquidity are maybe more crypto native, but you can see a lot of FX venues or FX ECNs, like CME, for example, is a very, very good example where a lot of TradFi, even if they don't want to open accounts on crypto native exchanges, they can start with CME, for example, because most of them have a CME account, right? And they can start trading Bitcoin futures or Ethereum futures on CME, right? So I think the infrastructure has improved a lot, right? And I think it's just a matter of time that these guys would understand how this whole ecosystem works, and they would just adopt and interact with this asset class.
Yeah, so we've been talking about, whole this accessibilities, infrastructure, education level or use cases. So yeah, as I mentioned earlier, this kind of institution adoption, the topic has been discussed a lot. But, so as a players in Web3, we do need to work on, to building more credibility in Web3 so that institutional adoption hopefully comes sooner. So I do believe this kind of discussions needs to go on to evaluate, this kind of the things that we've already talked about. So I would love to go on, but sadly the time's up. So I think this is it. Thank you for sharing your insights, and please feel free to reach us outside of the stage. Thank you. Thank you all.
Thank you.
Thank you very much.